Hello and welcome to FXStreet Currency in Play. I'm Matt Brown. I'm joined by Marc Ostwald, who is a strategist at ADM. Good morning to you, Marc.
Good morning.
Right, all things FX, it's non-farm payrolls day, 1st of September already, believe it or not. Looking at some top trends, well, speaking of non-farm payrolls and looking at dollar pairs, starting off with cable, open positions in calls spike on the CME. People positive on the pound.
It would appear so. I'm not really quite sure where this particular idea comes from at the moment, because I suppose one might argue that some of the data that we've had of late here in the UK has been slightly better than expected. But as long as the consumer spending numbers look as weak as they are, I think the dovish majority on the BOE is not going to be in any hurry. And as much as I have some sympathy for Mr. Saunders' view yesterday that we don't really need the extra stimulus, I think right now signalling hiking rates when wage growth is so slow, the economy still faces a lot of uncertainty. And as much as we had the manufacturing PMI here in the UK this morning, which was much better than expected, at 56.9, very big rise in the output number. Unfortunately, the fact of the matter remains is that manufacturing constitutes just 9% of total GDP. So the important numbers for us are going to be the construction PMI numbers and services next week. But I guess what people are looking at here is probably some of the, in cost terms, volatility is very, very low. So if you're looking for perhaps a sharp move, positioning yourselves in calls probably is the cheapest way in terms of cost of carry of your positions. I'm not necessarily thinking that people are necessarily getting married to these positions, but it's a good way of taking out some insurance in the first place.
Understood. And dollar yen fails at 38.2 Fibonacci level of July, high August low. Dollar yen kind of anchored around this 110 level, and here it will stay, it feels, for the time being.
It's going to stay there, basically, as long as the cloud over A, the US inflation outlook, and B, above all, the political outlook remains. And the biggest problem remains that last week, when we got the commitment of traders data, we didn't really see much leveling off in the short yen position. And that's, of course, leans very, very hard against people going long of dollars at the moment, because there's already a very big short yen position. It's smaller than it was, but we've come down from 100,000 to 75,000. 75,000 historically, certainly in recent years, is actually very, very high. And as long as that's the case, you've got this battle between the safe haven quality that the yen represents in amongst all the troubles that we've got in the world, and on the other hand, the lack of incentive from yen interest rates.
Understood. Euro dollar stuck near August 2nd high ahead of non-farm payrolls due out 1:30 UK time. Non-farm payrolls.
Yeah,
let's talk about that.
Yeah, okay. So I mean, the payrolls number itself probably is not going to be that significant. One would think that it may well come in slightly higher than the 180,000 consensus due to the ADP, though that tends to always overestimate the initial payrolls estimate in this month, typically by up to something of 50 to 60,000. So that's, people, you can understand why people are a little bit cautious taking a read. However, there are a lot of other indicators out there.
Yeah. Should traders be looking at that headline number or looking beyond that?
Well, they are going to look beyond that. They will look above all, I think, at the underemployment rate, which has been a bit sticky of late. If that were to come down quite sharply and combine with the most important aspect, which is going to be the average hourly earnings number, which is expected 0.2, tick up to 2.6 year on year from 2.5. Not exactly knocking the lights out there, particularly. Yeah, but not bad. That's where we need the surprise if the dollar's going to actually, a dollar recovery is going to gain some traction. We do seem to be finding a bit of a base, particularly against the euro and to a certain extent against the yen. But if we were to have a weak number, you can see the dollar bears deciding that they might need to open up another front, even if that might not actually appear till next week, because obviously we've got the Labour Day holiday on Monday.
Be aware of that, viewers.
Yeah. So.
And let's just have a look at the calendar. The headline, obviously, the non-farm, but in amongst that, we've got ISM manufacturing PMI,
Yeah.
that as well, maybe.
Which is important because actually the statistical, the activity data in the US, i.e. the economic activity data in the US has been very, very solid. Interesting contrast here between the ISM manufacturing and the market PMI. Market PMI is expected to be confirmed as having fallen to 52.5, as it was in the flash estimate. Manufacturing ISM, on the other hand, is expected to come in a very, very solid 56.5, with orders still above that 60 level, i.e. best levels we've seen, well, not the best levels we've seen this year, but in trend terms, we've been above 60 for most of this year, indicating the manufacturing sector in the States, outside of, say, the auto sector, which is a little bit beleaguered at the moment, is still doing pretty well. So if we do get a bit more wage and consumer price inflation, then the activity data will start to put a lot of pressure on the Fed.
Understood. On that note, Marc, thank you very much for joining us today.